headwinds that we've been seeing and slightly liquidity crunch in the world of startup, Indian startup ecosystem saw a healthy funding during FY24. Now, that is where we are going to be entering. How are we going to be entering the new fiscal year? How was the quarter gone by? Sharad is joining in with us to tell us more details on that. Sharad, what's happening in the world of startup and what can we be expecting now in this new fiscal year?
Well, it's a very interesting trade. The first quarter of calendar year 2024, if you look at it, the funding has come down and it's down almost 51%, coming at $1.6 billion. Now, as per a report by Tracxn, India still ranks 4th biggest market when it comes to the funding, but there's a slowdown. Of course, there was 3 straight quarters of growth which was coming in, but the late stage funding, that has seen the biggest drop. Certain segments are there, so like your retail segment, the fintech segment, that has performed really well, but the number of IPOs, if you look at it, that has gone almost 4 times on a year-on-year basis. And do remember, importantly, fast exits are also happening. So a lot of startups, especially which have not gone for Series C and Series D, they are also exiting via IPOs, and 2 new unicorns have come up. Of course, last year there weren't much unicorns, so 2 big names coming up, Perfios and Krutrim. Now let's look at the quarter, how the trend has happened, and you look at it, there has been a 3 straight growth of quarters coming in, but now there has been a limitation coming in the first quarter. Of course, the number of funding rounds also has come down, and also the total fundraise. Now let's look at the top funding rounds, which of the startups have actually been there, where a very strong movement has happened, and the most heavily funded startups are your Capillary, as well as importantly, if you look at it, the large names coming in, they include Credit Saison as well as Shadowfax as well.
Thanks for that. And
if you like this video, then like, share and subscribe to ET Now.